Joining us now is Berkshire's chairman and CEO, Warren Buffett.
स्टॉक मार्केट रिलेटेड इंटरव्यू वीडियो पाने के लिए मेरे चैनल को सब्सक्राइब करें और बेल आइकन को दबा दें।
Warren, there was other news that crossed the wires just last night in another deal that you're involved in. That would be backing up Occidental in its bid to try and take over Anadarko, which is also engaged in talks with Chevron, who's also got a bid out there. Last night, Occidental put out its own statement and said that it's going to be revising its proposal. It's now talking about a deal, still $76 a share offer, but 78% cash and 22% stock. By increasing that cash portion, it allows what they call significant immediate value, greater closing certainty, enhanced accretion, because with this, they no longer have to ask their shareholders for permission on this. What are your thoughts about where the deal stands and what this latest update says?
Yeah, I got a call yesterday evening. First time I talked to Occidental, actually since a week ago yesterday, Sunday. And they told me that they were going in this direction, which I like, but I have nothing to do with it. I mean, we committed $10 billion, and it had nothing to do with how they framed their offer, how much they offered, or anything else. That all they knew was that they were sure they could get $10 billion from us if they complete the deal with Anadarko.
One of the pieces of the letter that Vicki Hollub, the president and CEO of Occidental, put out in its letter back to Anadarko surprised me a little bit with just how it still seems like this is a hostile bid. There's not good faith talks that seem to be taking place between them. Based on her letter, she said this: "We remain perplexed at your apparent resistance to obtaining far more value for Anadarko shareholders, which has been expressed clearly through our interactions over the last week." It sounds to me like that is still kind of a hostile bid.
Well, it's my understanding, and bear in mind, the first thing I heard about this was a week ago Friday, when Brian Moynihan called and said the people at Occidental like to talk to you, and I talked to them on Sunday, a week ago yesterday. My understanding is Anadarko and Occidental had talked much earlier, well before the Chevron bid, and we're talking about a transaction, and then Chevron made an offer which Anadarko accepted, but Anadarko was for sale. I mean, and so it held talks about selling itself to Occidental. This is my understanding, so they were talking. Maybe they were talking to more than two parties, for that matter. I wouldn't know that, but they decided that they were willing to sell. I'm sure subject to price, obviously, and they accepted an offer, and Occidental felt they had a better offer, and that's apparently where things still stand, but I don't know all the details.
Part of the idea behind it had been that, well, would Occidental be able to get approval from its shareholders because its stock was under pressure? Some of the shareholders obviously didn't like the deal. By using your cash instead of issuing as much stock as they had anticipated originally, that will keep them from having to go to their shareholders to ask permission for this. And as they're saying in their own letter, that certainly increases the certainty of this deal taking place and removes some of that uncertainty.
Yeah, I would also think that the shareholders, if you own Occidental, you're bullish on oil over the years, and you're probably bullish on the Permian Basin because they have such a significant portion of their assets there. So the idea that they will use less stock and more cash as part of the deal, although they're getting the cash from us. But I would think net, if I'd been a holder of Occidental over time, I probably would like that kind of a deal. At Berkshire, I hate to issue stock. So generally speaking, if any company we own is buying something, we like it better when they buy it for cash than they use stock, because we like their stock. So we'll see what the reaction is to this, but I would just imagine it had been an all-stock offer to begin with. I would think people would net their shareholders, but the shareholders will be speaking out. But I would think that the shareholders would like the shift.
Andrew's got a question from Beck in studio, too. Andrew?
Sure.
Hey, Warren, I was just curious whether you were surprised that Anadarko hadn't engaged with Occidental on this at this price, and also if there was a price at which you would think that that Occidental shouldn't pay, meaning if Chevron were to come back and they're 5 times the size of Occidental, they could just write a check and this could be over with if they wanted to. But if the price were to go up, I know you get preferred shares ultimately. Is there a price at which you wouldn't look at this favorably?
Well, we've committed the $10 billion, 100%. We do not have any control, nor did we want any control over what Occidental did with our $10 billion in the terms of everything. There's nothing in our deal that provides that they have to come back to us and request permission really to do anything. It's a remarkable deal, but that's the way we do them, and in that respect, so they get our $10 billion if and when they close a deal with Anadarko, and they don't have to consult us. They certainly don't need our vote. They don't. It was a matter of courtesy. I got the call yesterday, but it was not a matter of necessity on their part. And that's one of the advantages of dealing with Berkshire. I mean, we can do things that other people don't like to do or their lawyers don't like them to do. And this is not a deal that our lawyers would have written.
Is this deal a bet on the Permian Basin and on oil prices, or is this just a bet on, hey, it's great to have an 8% preferred?
Well, not great to have an 8% preferred if there isn't any oil there. No, it's a bet on oil prices over the long term more than anything else. It's also a bet on the fact that the Permian Basin is what it's cracked up to be and all of that sort of thing. But oil prices will determine whether almost any oil stock is a good investment over time, whether it's Exxon or some wildcat driller. I mean, if oil goes way down, you don't solve that by hardly anything. And if it goes way up, you make a lot of money. And it's not what it does next week or next month or next year. You're buying reserves that go far out into the future. So you have to have a view on oil over time. And Charlie and I have got some views on that, not too specific because they're not that well informed, but they are. We feel good about doing the financing.
Why don't you just buy it yourself? It's only a $35 billion deal, and you've got $110 billion in cash sitting around.
Well, that might have happened if Anadarko had come to us, but we wouldn't jump into some other deal that we just heard about through somebody coming to us and seeking financing. We wouldn't. No, we hope people come to us on businesses, but I had no idea that this transaction was going to happen. I mean, a week ago Friday when I got the call from Brian Moynihan, I'd read in the paper about the deal, but I've never had any contact with Anadarko of any sort.
David Faber reported last week that you had said you would offer up to $20 billion, double the $10 billion that you did do on this deal. Is that the case?
If they needed it. But I think they have an arrangement, obviously, with the Bank of America, who called us. I don't know anything about that deal. I just know that the B of A has arranged that debt financing. If there were a different sort of thing. But what I meant to some extent with that is I'd be also very happy if somebody calls tomorrow and needs $20 billion. Occidental just needed the $10 billion.
Okay, but you like doing these deals at bigger sizes, not smaller sizes?
Exactly.
Okay. Back to Andrew's point, this is there for forever. It doesn't matter if the bids go up. Doesn't matter what happens along the way. Your $10 billion is in this deal for whatever happens.
Yeah, there is. The lawyers don't write deals like this, but we tell them to. There's no material adverse change. There's no. If the stock market closes, but this deal closes, we're there. We're there under all all circumstances, and we have not written any outs into it, and but that's part of the attraction of doing business with Berkshire. And besides that, we do it all ourselves, so it isn't something that's parceled out among 10 parties, and each one comes in and has to get their permission to make changes and all that. When they came to my office at 10 o'clock on Sunday, week ago Sunday,
yeah.
They knew that if we agreed, which we did by 11 o'clock, they knew Berkshire was 100% in. Now, they had their own board of directors meeting the following evening, but they could say to their board, you're going to get $10 billion from Berkshire when this closes, and you don't need to give a thought to it.
Obviously, many stocks are under some pressure from what they were seeing from these Chinese trade talks, what the implications are from all of that. One stock that is under pressure today, shares of Apple. If you want to take a look at the chart, closed on Friday at 211.75. This morning, the bid's at 204.91. The ask is at 205.10. And that's because China has been such a huge component for Apple. Tim Cook talked in the last earnings last week about how things seem to be really improving there. Tim Cook also traveled to Omaha this weekend. He was here for the Berkshire Hathaway annual meeting. It's his first time coming here. But for Berkshire, Apple is now the biggest investment that they have in their equity portfolio. It's also, Berkshire is also the third largest investor in shares of Apple. So when we sat down with Tim Cook this weekend, I got the chance to ask him what he thought and how he found out that Berkshire was first buying into shares of Apple. Listen in.
I found out probably like you did, which is the 13F gets filed and somebody tells me about it, and I thought, oh, this is really cool. Warren Buffett is investing in Apple. We welcome all shareholders, but we run the company for the long term. And so the fact that we've got the ultimate long-term investor in the stock is incredible because our interests are aligned. And then I knew Warren before then, but we had no idea they were looking at the company. They do all that obviously secretly and have their own method of doing that. And it's been a privilege, and I'm super happy they've been accumulating.
What happened when you found out? Was there talk around the office? Were there any high fives, or was it oh boy, now what?
It seemed like recognition in a way, like an honor. And a privilege, and I don't mean that in a light-hearted kind of way. I mean, wow, it's Warren Buffett is investing in the company, and and so it felt great. And I think for the whole company, because we knew that he didn't. He's been very clear he didn't invest in technology companies and companies he didn't understand. He's been totally clear with that. And so he obviously views Apple as a consumer company, and in a different kind of way. I think that's really special.
Warren, what did you think hearing this? Because when I told you we were going to tell you how he found out, you said, "Oh, good, I'd like to hear the story." You've never talked to him about that?
I didn't, not about that specifically. No, I've known Tim a little over the years. I see him maybe at least once a year, and maybe twice a year. And I've talked to him on the phone a few times and sent him a letter. I sent him a Martin Luther King speech some years ago that was kind of lost to history. That was terrific, and I thought he'd enjoy. But no, I didn't call him up while we were buying. I try to keep as quiet as I can when we're buying anything.
China, though, is a huge issue for Apple. It's why the stock had been under pressure earlier this year, or at the end of last year. Last week on the earnings call, it certainly sounded like they thought China, the situation there was improving. What does this news today mean for you?
Well, the important thing is really what the relationship is with China 3 years, 5 years, 10 years, 20 years from now. This all enters in, and certainly it's hard for me to imagine that the two most important countries in the world would do dumb things over a long period of time, but they could. I mean, the possibility always exists that you get miscalculations or egos or national pride or whatever it may be, and that things do escalate. I don't think that'll happen. I know it shouldn't happen. I think it's a low probability, but that would be bad. It'd be bad for everything Berkshire owns. I mean, it isn't a question of Apple, or it have a very negative effect on our economy, other world economies, and there's a chain reaction of sorts, type of thing. So I don't think it'll happen, but I don't think it's zero, the probability.
You say it would be bad for virtually all the businesses that Berkshire owns, but Apple's in a pretty unique position because it is so front and center, because it's already come up as a potential target for some of these things. Do you think Apple runs a special risk or not?
Well, it would have, I mean, obviously in terms of our electric utility in Iowa, would have a very minor effect relative to other types of businesses. But the ripple effect, if you get a recession, and it hits everything almost eventually. So I think it's very unwise. It's kind of like having if you have a nuclear war, you don't want to say ha ha ha, if you're in Canada because they're only attacking the United States or something. It's impossible to contain it if you have two superpowers in trade involved, and you can't predict exactly how it spreads.
Apple shares are down 3% this morning, just looking at the chart.
Yeah.
That's good. Why?
Well, because they're repurchasing shares, and when they repurchase shares, our interest goes up, and we don't lay out a dime. I love it, and obviously it's better to buy it at X than 2X.
They've said they'll purchase. They've reauthorized up to $75 billion in additional shares. You're behind that? You're in favor of that, I should say.
Wildly in favor of it.
We're going to talk a little bit more about share repurchases, not just with Apple, but more broadly, because it is a question that came up pretty frequently this weekend at the annual meeting, too.
Repurchases can be the dumbest thing in the world or the smartest thing in the world. And I've seen both. But they're just, repurchases by the company are just like purchases by us. They're dumb at one price and they're smart at another price. And I like it when we're invested in companies where they understand that. Many companies just repurchase, and it's the thing to do, and they're encouraged to by some shareholders and by their brokers. And repurchases can be dumb, they can be smart. At Apple, they've been smart.
Warren, we did talk at the top of the last hour about what the China tariffs potentially mean for business and what they mean for Berkshire. But you're looking at the markets down almost 500 points this morning. And for people who are just waking up and just kind of trying to figure out what this means for them, for their portfolios, for their businesses today, I'm sure they've got some questions. What can you tell them? What do you say when you look at the markets, I guess, down 460 points right now for the Dow?
Well, I'm saying, if you own a farm and you're worried about selling your farm because you read the newspaper this morning, or if you own a perfectly decent business in your town and you're worried about you think you should worry about selling your business today because of that, then you should worry about thinking about selling stocks. But if you look at stocks as businesses that you own little pieces of, why in the world should you sell it based on headlines of any sort? I mean, if you expect a farm to be a good investment over 10 years, if you expect an apartment house to be a good investment over 10 years, and if you own a marketable security which is an interest in a business, and you expect that business to be a good business over 10 years, it's nonsense to get feeling good or bad about what stock prices do in a day, unless you have extra money and they go down, and then you feel better because you can buy more of them cheaper. Just like if you could buy the farm right next to you cheaper, you'd love that if you were a farmer.